Hi again, it's Todd Keffury with Cadenza Financial Planning. So one of the things Cadenza does for clients is work on strategies to make their businesses as tax efficient as possible. And in a minute, I'm going to show you just one example of what this looks like. But first, I want you to ask yourself whether you net at least $40,000 in freelance or sole proprietor income. If so, what I'm going to talk about could have a tremendous impact on your financial future. You know, over and over, small businesses and freelancers have been given the blanket financial advice that goes something like, you need to save for retirement. Well, the reality is not that you don't have enough money to save or invest. The reality is that under the financial industry's prevailing model, it's not worth it for them to help you find ways to save and invest. You know, they'll tell you to save, but in many cases, you don't get a lot of insight into from where that money will materialize. So the case I'm about to show you in eMoney, which is the planning tool that Cadenza uses to model new and ongoing financial plans, I'm going to walk you through a real life case of a small business owner that I helped overcome this water treading and turned a huge annual tax bill into what will likely be an exponential savings of $500,000 over the next 10 years between their net savings in tax and the freed up cash that was instead invested for their retirement. Now, this business owner, like most, didn't have a lot of time to work on their business because they were too busy working in their business. For years, this individual visited their CPA who prepared their taxes and had little more advice than to contribute a few $1,000s to a retirement plan to offset some of their tax liability. As it turns out, they were working roughly 2 months of the year that they didn't have to, exclusively for the IRS. In fact, after revamping this business, the owner didn't have to work nearly as hard or as much to net exactly what they were netting before. Plus, they freed up money for retirement savings at the same time. I can't tell you the number of freelancers and small businesses I've seen that the IRS absolutely loves. So if you love the IRS as much as the IRS loves your poorly structured business, you can stop watching here and get back to work. If not, though, let's dive into what this restructuring looks like. So even though I went a little quickly and your head's spinning, you're probably like, what? You can probably wrap your head around the concept of saving $500,000. And as I said at the beginning, if you're netting over $40,000 in self-employment income, you and I should have a calm, relaxed, in-depth discussion on whether this can work for you. Now, some of the things to keep in mind when you restructure the way that we did here is that it does require a bit more work. Your accounting needs, it needs to be more vigilant. You'll probably have more interaction with your state's employment agency, and you'll likely want to create and maintain an accountable plan to reimburse yourself from the business for business-related expenses. Also, there's the extra expense of an additional tax return every year, so some additional administration for sure. And in reality, all these factors are weighed in when it comes to making the determination of whether it's worth it or not to pursue any business restructuring strategy. Hey, if it costs $1,000 to set up and maintain this and you save $1,200 each year, it's probably not worth it. But how will you know until you actually go through the process of evaluating the possibilities? Thank you so much for tuning in. And please visit cadenzafinancial.com for more information or to set up a no obligation consultation to see if there's a fit between Cadenza and your need for a successful financial outcome. Thanks again.